This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, December 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 2 at 446. January soybeans were down 4 at 1083 and a quarter. And March Chicago wheat was down 6 at 528 and a half. We had a number of export sales announcements here this morning, mostly on the beans side. 136,000 metric tons of beans to China. That was for 25. 119,000 metric tons of beans to unknown for 25, and 212,000 metric tons of beans also to unknown for 25. We did also sell 120,000 meal to Poland, and that was for 25. We will have crush will be out. Nopa crush will be out at 2 o'clock Central this afternoon. They're going to release September and October. So the estimates for September, they're looking for a number close to 205.4 million bushels, and October they're looking for another record 234.2 million bushels. So we'll take a look and see what they come up with there. Guys, what we know here this morning, pretty uneventful report yesterday, which I think was as expected. We weren't really looking for any fireworks. One thing to note, commitment of traders, they must have just been getting tired of being lit up, because they're now talking about catching up by the end of December. It was going to be into January, but hey, what do you know? We've got the data. We'll get her out. So kudos to those guys. And last but not least, news yesterday, Argentina cutting export taxes, I think, was kind of a headline yesterday. We talked a little bit about that. It's kind of got the bean market acting a little slippery here. So anyway, with that, Justin, thoughts here as we start the day this morning, and from there we'll throw it around the room.
Yeah, thanks, Dan. We bitched about this weeks ago, but the commitment of traders thing is such a joke. I mean, we kind of talked about this, but we're going to find out it's all a history lesson. We're basically finding out that the funds covered 200,000 contracts in beans in 3 weeks. Yeah. And that's what put the highs in. So there's going to be one more week where we pushed higher. So I'm guessing next commitment of traders number is going to be another big number in beans, but they're going to be closer to a record long than not. On this news, front running China and all these things. And to me, the bean market is as simple as that. They got caught, they flipped from being short to a massive long, and now you're punishing the fresh longs at higher prices. So you're forcing them out. And I think that's the biggest fundamental in beans, personally. When you talk about 200,000 contracts, that's 1 billion bushels of beans that they bought in 3 weeks. And the last time they were that long, we were at $16 or 15 and change. So to me, it's actually impressive that we only got to 1160 something with that much buying. So, I think the bean market's coming back down to try to find the, fair value. So you're probably getting some liquidation in funds and, see if we can run into some business. Obviously, we've announced 467,000 tons today. So now we're probably coming back down to, where we start maybe doing some business. We just got, when somebody buys 200,000 contracts in 3 weeks, it's going to go higher. So I'm sure farmers selling here and South America, to offset that, but when we talked about, all of a sudden you got $1, uncompetitive with South America, that does matter. So now we're getting some kind of liquidation and trying to find what's a fair value here. Corn, we'll see what corn numbers. I think they were short 60,000, only 60,000 contracts as of November 4th. So my guess is they're kind of neutralish now. But it's at least, stayed competitive competitively priced in the world. So a little different there. So I think it kind of actually makes sense what's happened here in hindsight. And that was my fear, was that we're going to look back and like, oh yeah, that's, that's why the information should have been just a big data dump and got, current at the time, versus letting a very small number of people actually know the number and then let the rest of us, find out a month later. So
yeah, no doubt. What's your opinion on this Argentine deal? I mean, is this a headwind going forward? I know they talked about it as part of their overall policy, but now starting to be enacted, looking to
certainly a headwind. I mean, the question is, again, I go back to only in the short run can you force someone to pay a higher price for your product. So it's just another competitor at a lower price. So it certainly is a headwind. Beans just have a general headwind. So again, if, China, Sino-Grain, whoever is going to be forced to buy U.S. beans, you can have bouts of strength for sure. But if the rest of the world can buy it cheaper, it's just an uphill battle. Yeah. I mean, I think it's that simple.
Dustin, what are your thoughts after looking at yesterday's report? I know it was pretty much a non-event or anything like that, but I guess now we've put our focus on looking ahead to January, I should say, as we'll get final numbers and put a bow on this year.
Yeah. So, regarding the report, it's really, they didn't change anything in production. They raised corn export numbers, which, that's largely should have been expected. Demand's just been really good. So it's funny to see the market react to the report, to be honest, when this is typical. The USDA doesn't change anything to do with production, and then they raise export numbers, which the market has all the same information that they have, and then the market reacts to that. It's always boggles my mind why that would be a reaction, other than maybe it's just a hurdle to get through. But I would say one thing, we did have really, really good domestic crush last month, and I think the best chance for beans, as Justin's put up many times, is just strong domestic U.S. biofuel policy. I think it's absolutely crazy when we're talking about farm crisis right now that they're doing a review period for allowing foreign feedstock, Chinese used cooking oil, to qualify for the subsidy. This is, I think, the biggest mistake of all of the things that's happened in the last couple of months for guidance. We do have oil share that's kind of rebounded subsequently since then. Oil share is back up to 46%. Argentina cutting export tariffs another couple percentage points. Meal kind of led the move lower yesterday. Our crush margins have slumped quite a bit. I mean, what's going to happen if our crush numbers don't continue to outperform because crush margins have dropped? I think that's probably my biggest concern, is that domestic usage is not as strong because we go through another year of importing a bunch of basically palm oil labeled used cooking oil.
Now, I did send you guys yesterday, there was a bipartisan bill introduced in the House that would extend 45Z all the way to 2033. Yeah. Now, again, it's all that's got to get done, but that would be a huge step in the right direction. Like actual 8-year time frame where investments can be made, all those kinds of things versus 1 to 2 years. So those are the kind of things that we need to see happen. And actually, I know that the guy from Iowa that was, at part of the roundtable that's getting a lot of flack on Twitter and stuff. But one of the things that he did say, outside of his son wanting Trump to come for Christmas instead of Santa Claus, was talking about, E15 and domestic use, which I thought was really good commentary by him. Is that we want to build a demand base domestically. And so I think, as we've said for, I feel like a year on the show, that really is the path forward. So all these trade deals, I mean, these are Band-Aids, because the inevitable fact is the rest of the world's growing in production. And we are just going to be uncompetitive because we actually pay people and don't have slaves and stuff like that. So it's going to be, it's going to be harder for us to grow, cheaper than them. So we have to find out ways to use our product domestically. Excuse me.
Ben, anything to add there? Looks like you're chewing on something over there.
Yeah, I just, I look at the corn market and excited that, the demand is as good as it is. On the market profile, the amount of corn that's changed hands between, call it 43.5 and 47 in the last, 45 days is huge. Over the last year is huge. And if you go back to springtime, how much time we spent around 40 in December. So that kind of correlates there. I think that the market for corn is going to look at the January yield numbers. And I think that's, unchanged. We probably bleed out a little bit. And if we get a yield reduction commensurate with what we saw last year, the potential is there to take another leg up. And soybeans are going to remain volatile. A lot of people have it in their mind that we're going to fill this gap that comes in around 63. I'm a little suspect just because of the type of gap that it was that we would fill it this quickly, but we may. Second day below the 50-day moving average in corn. So we'll see, that a lot of that trade on the way up, it's pretty clear to see it was automated. It was get me long, get me in. And, the potential is here that it's get me out on the downside. What is the commitment at this point for managed money to stay long beans, I think is the question. And we've seen it both ways in our markets where they will weather a large short or long position, or sometimes it's just eject and get me out. And that'll probably be somewhat driven by the pace of our exports. I think we got kicked down the road from they'll have to be bought in by the end of the year to now the end of February in ultimately South American weather.
Hey, Ben, I was just thinking about this, just the compounding effect of soybeans, meaning that if you look at, new crop ratio, we're back down to 2.35, which is kind of the long-term average for corn beans. I've long been in the camp that, the corn acreage number this year was so large that you're just naturally going to have, 3 or 4 million tons or 3 or 4 million acres switch back to corn just naturally. But I think it's so important, what happens in soybeans. I think that's kind of linchpin here of what new crop prices do, because if you get, if trade relations turn sour and beans are just no good, I think all those acres that we saw switch to corn out west, where they're seeing $1.50 under, like no export business out of the PNW, probably hard to get those acres to switch back to corn unless you develop a story in beans. I think if you develop a story in beans, there's a quite large switch that could happen. So I think there's such a range of things that could happen depending on the soybean policy, personally.
Yeah, 100%. The soybean market, I had a conversation with an industry peer the other day, and we were talking about this. And when you look at, what do you expect for corn acres? And I think you definitely have a natural rotation back. But that being said, you could really have an interesting scenario if you could get new crop beans up to, call it $11.50 to $12. I think that would be an exciting place for people to really look at the overall balance of our production for next year, because we have record South American crop, record U.S. crop. Whether the yield is 180 or 186, it's record by a lot. And here we are looking at a balance sheet after yesterday that with a yield reduction, I know that there's some fluff in feed residual, whatever category, but you're doing that, and you could actually take our you'd pretty quickly get our carryout down to a 1.617 in corn with that kind of production. So I think there's a lot left to be written in the next 7 months, and agree a lot of it's going to be dependent on how soybeans act, especially as we head into the planting period.
Very good. We've got a couple minutes here. Welcome back, Rye. You didn't miss much. Pretty choppy trade on the cattle side. Same for hogs. So, I guess outside of the norm, it's been a pretty quiet week here up till today. What are your thoughts so far this week?
Yeah, definitely on the quiet side. We really haven't seen anything cash wise. It was just kind of a mixed close yesterday. And, it just feels like we're running into some resistance. February futures still held the 40-day moving average. I think that's a good sign overall, but still not much as far as cash. We've seen beef prices creep up here in choice, but it just feels like they're kind of flatlining, at least for right now. So it just feels like we're running into some resistance. We're at that 50% retracement level from the lows. We're up, over $20 on this rally. So I think naturally you're going to get just a little bit of a cautious trade here. It just feels like decision time for a lot of producers. So I think there's still quite a bit of just kind of general cash optimism right now. But, and you look at seasonals, like there's a million reasons to be still pretty optimistic here going into the end of the year. But, obviously it's been a pretty big move. There were 15 deliveries posted yesterday. The oldest long from August 18th, futures were trading around 233-ish, 233.20. So it just kind of goes to show that those longs are, still in the market here, and we're considerably lower from there. So just something to keep in mind. But production schedules are still expect to be pretty heavy this week. So overall, just not a lot of news to go on just yet. A lot of technical trade and sentiment at this point. And then on the hog side of things, it just kind of felt like you had this sharp break to start, and then you kind of bounced back. It just felt like there was a little bit of optimism from the product market. Bellies were up 349, back up to 129, and carcass overall was up 93 cents. So cash prices starting to firm up again, but still a long way to go to get back up to where the Feds are. So overall, it just kind of feels like kind of a lying in wait. The WASI report didn't really do much, I think, to move the needle overall on the hog side. But on the cattle side, it looked like, beef exports or imports rather were jumped pretty significantly on this WASI report with the opening or the rollback of those tariffs on Brazil. So it's up to about 500 million pounds for next year. So I think just in general, the market's not going to like hearing that we're going to start competing with South American supplies here and seeing those on the shelf. So overall, just kind of not good news longer term, but we'll see how we digest that today.
Very good. Appreciate the update there. Just came into the open. We got March corn down 1 3/4 now. 446 is the last. Jan soybeans are down 4.5 at 1082 3/4. And March Chicago wheat's down 6 1/4 at 528 1/4. We will get a Fed announcement out here about 1 o'clock Central. They're looking for a 1/4 point cut, so we'll keep an eye on that. Talk about it in our evening commentaries. Also, tomorrow morning, 7:30 Central, we'll get another weekly export sales update. This will be for the week ending 11/13. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.